JD stock is down over 39% from its peak. It was even lower in the past, but the market has started to rebound. The question many of you have is whether JD is still a buy at the current price. As you probably know, China keeps growing, and businesses there will profit a lot. Now, there are also risks, China regulations and others. That's why in this stock analysis I'll help you see their business model, their fundamentals, what opportunities they have, and the risk for this company. So stay with me till the end of this video and you'll find out the outlook for this business and whether JD.com is a good investment at the current price. Let's begin. JD is a Chinese online retailer and its business model is like this. JD buys products from different suppliers and sells them on its JD.com website and apps. Moreover, JD allows other well-known brands and other third-party sellers to sell on its platform, and JD charges them a sales commission. In addition, JD offers advertising services to sellers on its platform. If you are a new brand on their platform, you can run ads on JD.com or its apps to increase your sales faster. JD also has a partnership with Tencent to use its social media apps to promote different products, to use Weixin payment, and others. Tencent owns 2.3% of JD. Walmart also has a 9.3% interest in JD, in a partnership to sell products on JD.com. Plus, JD has several subsidiaries, where it holds a controlling interest. For instance, JD Logistics, which offers supply chain services, it covers 99% of China's population. This subsidiary helps JD to deliver its product to consumers. Another subsidiary is JD Property, which develops and manages logistic facilities, or you can call them warehouses, and other subsidiaries like JD Health, Data, and others. Moreover, JD has an investment portfolio. Its major holdings are JD Technology, China Unicom, Vipshop, and others. JD keeps investing in technology to improve its supply chain system, such as AI, big data, and others. So their business model is not that simple, because they have many subsidiaries, plus investments in different companies. But you can understand this company even better by looking at its segments. As you can see in this image, a big part of the revenue came from selling merchandises. Around 80% of total revenue came from the retail business, where JD buys products from suppliers and sells them to consumers. Only 7.8% came from third-party sellers and marketing, plus 11% from logistics and other services. Now let's take a look at their fundamentals. JD has a market cap of about 101 billion at the current price and pays no dividend. Revenue is expected to grow more in the future. JD currently has about 588 million active customers, so there is still room for growth. Their earnings are expected to improve from 1 billion to 4.6 billion. You may have noticed 7.5 billion in earnings in 2020, but most of their money came not from their operations, but from other investments. Now, as China keeps growing, the revenue is likely to grow even more in the future. The question you should be asking is if they can improve their margins over time. The retail industry has many billions in revenue but low profits, because they buy products from suppliers in large quantities and sell them at a higher price. They try to make a profit on those low margins, to buy low and sell high. Total assets are about 81.4 billion, of which cash is about 30.6 billion, plus 8.2 billion in equities, and 2.1 billion other investments. So in total, JD has 41 billion. Keep in mind that the market cap is about 101 billion. Total liabilities are around 43.3 billion, of which debt is about 6.5 billion. So as you can see, JD has a great balance sheet. Now let's see what the opportunities and risks are. As I said, JD has about 588.3 million active customers, and China's population is around 1.4 billion, so there is room for growing in the number of customers. Moreover, China's GDP is expected to grow by 4%. You might see even higher numbers. So wages will increase over time as the economy has good tailwinds. So far, there are two major factors that can improve JD performance. Now, JD can do even better if they improve their operations in the future. What I mean by that is their costs. For instance, JD needs many workers in its warehouses and for delivery. If they can reduce these costs, their profits will improve. JD is investing in new technologies such as drone delivery and autonomous driving. As you can see in this image, that little car will be the next delivery person. So when they start implementing those new technologies, their delivery system will get better, plus the labor costs will decrease. Besides that, JD will automate their warehouses. They already have some fully automated warehouses, and this will improve their efficiency even more. Now let's see the risks. The first risk, as you probably know, is China, its regulations. You can understand those risks very well if you read this text. You can pause the video or take a screenshot. I think you can also zoom in if you can see it very well. First, JD might be delisted from the US if China doesn't allow auditors to share more information with the US. If that happens, make sure you have a broker that allows you to invest in the Hong Kong stock market. JD is also traded there. If you don't know which broker to choose, you can check my description below this video. Second, if you invest in JD or other Chinese companies, you don't own anything in China. You can only buy a Cayman Islands holding company that has a contract with Chinese companies. And that agreement depends on China's regulations. If they decide to change the rules or cancel that agreement, they can do it anytime. Now, that sounds pretty unfair to investors. You are at the mercy of China. If Chinese Communist Party goes crazy, then we investors can lose our money. If that happens, no one will ever invest in China, and their economic growth will slow down. Do they want that? I think they don't. They want to attract more investors, but at the same time to protect their country. By the way, I'm invested in China, so I took that risk. It may happen and I lose all my money, or China will keep growing and also my investment. So you have to see for yourself if you can handle that risk. The next risk is the competition. JD competes with Alibaba, which is a major player in China. You can check my analysis about it if you want to find out more. Plus, there are other retail companies looking to take advantage of e-commerce. Now, don't think JD will go bankrupt. They can do business together. The question is whether they can maintain their profit margins and improve them over time. That's why you have to follow those companies and take advantage at the right time. Now let's talk about investing in JD.com. The price has started to rebound as more investors have hope in China. And the question is JD still a buy? Well, this depends on you, what return you want. That's why you also have to see the risk, how much money you can lose, and the reward, how much money you can make. So the risk of investing in JD depends on their future growth and their margins. If JD faces intense competition and has slow growth, then the market cap might go to 60 billion. Now, the reward, if JD keeps growing and improves its margins, then the market cap might go to 120 billion. Plus, you add the cash they have, 41 billion, this means 161 billion. And if their margins improve, then the value will be even higher. It can go to 200 billion. But we don't know the future. That's why you have to invest with a margin of safety and follow this business to see its performance. So, in my opinion, JD will be a buy when the market cap is around 60 billion, or even lower if you have that chance. But again, this depends on you, what return you want, and if you can handle the risk of investing in China. I currently don't see JD as a great opportunity at the current price. This doesn't mean you can't make money with JD. As I said, the market cap can go to 160 billion. But you also have to focus on the risk first. And tell me in the comments, where do you see this business in the next 10 years? And if you find value in this video, please give a like and subscribe to see more videos like this because I want you to succeed.